Adani Group. In fact, we are also picking up from sources that the Reserve Bank of India has sought information from banks on their exposure to Adani Group. What we understand is that the information sought from banks is a part of the standard operating procedure or SOP to address new developments that may have taken place. Sources say that it is standard practice by the RBI to seek information whenever any developments take place, and that's where its regulated entities have exposures as well. Sources add that the RBI is seeking the information from banks as the central database may not have the latest information, especially linked to the pledge shares, as the CRILC updates some data weekly or monthly.
Okay, well, let's talk a little more about this story then. We have Mr. J.N. Gupta, the former ED at SEBI, who's joining in now to discuss all of the developments. Mr. Gupta, hi. Thank you very much for taking the time out. First, your broader view in terms of what is taking place with Adani, considering that the pressure which is emerged after the Hindenburg report has continued, and now the FPO is withdrawn. Even there is pressure in terms of the Adani bonds. How would you approach this story on a larger basis, and how should shareholders react to it, retail shareholders?
Okay, we got to divide all the discussion in many parts. One is Adani Group as one, then Hindenburg report, and then withdrawal of FPO. So let me take it from the last one, the withdrawal of FPO. See, if you look at the problem that Adani Group is facing today, is it's facing a lot of pressure from the market and lot of pressure account of the Hindenburg report to deny and whatever. Now, when this FPO was subscribed, the price was around 2,800, 2,900, and the investors were sitting on a loss of 300 to 400 rupees at the maximum, and everybody had hoped that when the FPO gets subscribed, probably the market will become in a positive territory. But it happened reverse, and the market fell, the share price fell about 800, 900 rupees after FPO closed. As a result, what happened? The investors who had invested in FPO were sitting in a loss of about 40% of their investment from the day one. And that would have created another pressure, not anything, but in the market itself. Probably those investors would be wanting to book the loss, or they would be pressurizing Adani that what is happening. So in order not to have pressure or increase one more pressure point, it was better to withdraw FPO and then look at the other side of it. Now, those investors who are willing to buy at 3,200 rupees or 2,900 rupees, or whatever it was the price, and when they had got their money back, and the market price is less than 2,000 rupees, probably they would put the money back in the market, buying the current shares so that the pressure on the stock will reduce. So it is, if at all it happens, that this could be a positive for the stock, because the same money will come to buy the same stock that is available in the market. That is one part. The second part is this: whatever Hindenburg report has said, I don't think there is anything new in that report, because everything has been in public domain. Now, this is a war of words between the two, Adani Group and Hindenburg Group. Hindenburg says that Adani has accepted what Hindenburg has said. Now, Adani has no option but to accept the fact. When you say Rajesh Adani was arrested in 2005, Adani can't say that he was not arrested. But Adani has said that he was exonerated also. Hindenburg has not said that he was exonerated. So Hindenburg report, if you look at it, is provided only that material which to cause cessation in the report. And unfortunately, market doesn't have the patience to see or sit on the judgment. They see a trigger and then panic starts. That is the second part. The worst part is that everybody is saying now that Adani is sitting on a bomb or hot potato of debt. And unfortunately, now you are a business channel, you analyze it something, but we have seen so many YouTube or so many journalists who do not understand balance sheet or profit and loss account or liquidity. They have been saying India doob jayega, RBI doob jayega, Adani doob jayega. All these things are panic creation. And my own understanding of balance sheet is this, that there is no pressure of debt in most of the company. The reason being they have got healthy cash flow, And most important thing is that unlike any other businesses which have gone bust, all their businesses are brick and mortar business. Now, their port entity, it is 25% of the Indian port capacity. No, you can't say that tomorrow the entire import-export will close because Adani port is not doing well, something like this. Similarly, their Adani Enterprise, a road asset and
So,
airport asset.
Mr. Gupta,
I would
we
say-
understand, we take your points, Mr. Gupta. We understand, your position on this itself. And because of the panic that has been created, could you give us a sense? You've been at SEBI before. What is it that the regulator should be doing at this point in time to assuage this panic, or maybe come clean on something like this? Because we've heard from our sources that RBI is asking the banks for their exposure to the group, which is standard practice as they do. Is there a standard practice for SEBI as well? And what do you think the SEBI should do right now?
See, I tell you, first of all, I cannot speak for SEBI as of now because I am no longer, it is more than 11 years I left SEBI. But I would say when you say RBI asking this data, now, are you telling me that RBI is not having this data, that what is the exposure of banks on thing with their hundreds of statement going back and forth every week? RBI knows everything. But anyway, this is what for public consumption is there. As far as the SEBI is concerned, if you look at Adani Group's statement, they have said that everything has been disclosed. And SEBI policy is very clear that buyer beware, investor beware. So if there is everything that is put in the Hindenburg report has already been disclosed by Adani somewhere or other, then there is no way SEBI can say anything.
Okay.
If at all tomorrow it is found that there is something which is missing in the disclosure, then SEBI will certainly act. That is point one.
Okay.
But my bigger worry is this, that in India, you have a very good risk management system in the stock exchanges, where if any short position is created, it is very well known to the investor or regulator and the exchanges. Now, here the position is that we do not know where and how the short position has been created. Is there any regulatory vacuum which
Mr. Gupta.
allows short? Yeah.
Yes. So, Mr. Gupta, you are saying that SEBI's motto is buyers beware, but right now we are talking about investors as well. So, we are talking about investor safety because we have seen a big fall in the stock prices as well. And when we talk about this fall on public offer, have you seen it happening in the past when you were with SEBI that any company did come with a large FPO, actually withdrew it because we have been talking about it not getting enough subscription, then getting subscription at the last moment. So where do investors stand in all this, the retail investors specifically?
See, I tell you, again, I will come back to that. As far as my memory goes, we have not seen, or rather, I have not seen such a large FPO being withdrawn, and that too after being fully subscribed. So that is the first time we have seen. As far as the prices going down, please understand the SEBI will not intervene unless until it finds that prices are being manipulated. There is someone who is pushing the price down or some manipulation is happening. So, and in today's scenario, when there is a lot of surveillance risk management system, such large-scale manipulation is not possible because you are not talking of a market cap of 500 crore or 1,000 crore. You are talking of market cap of lakhs and lakhs of crore. So, such manipulation is not possible. So, as far as I am concerned, I would say that I rule out any manipulation that is happening in that thing. So, that is the issue, I would say.
Okay, all right, Mr. Gupta, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is the view coming in from J.N. Gupta. He has been with SEBI in the past, so that's the perspective with regards to what is taking place. For the Adani stocks, there's some recovery on an intraday basis for stocks such as Adani Ports, but remember it hit a fresh 52-week low on an intraday basis in today's trading session, so some amount of recovery from those levels, but nonetheless, net weekday for the entire group of companies. We'll take a short break. On the other side, we will be talking to the management of GNA Axles to discuss their Q3 performance. Stay tuned.